Good morning to all traders. I hope you all had a good trading day yesterday. We are here again with another market insights. My name is Stavros Tousios, and today I'm going to talk mainly about the pound and also a little bit on dollar yet, as we expect some critical US data to come out later in the session. Now, I want to start with yesterday a little bit and talking about Fed Chair Powell, because it was his second day delivering his testimony. He talked about monetary policy and other issues. And also he talked about the balance sheet, that everybody actually was waiting some updates. Although he reiterated the Fed's patient stance, he added that Fed will make an announcement fairly soon on how it's going to reduce its balance sheet. So on that announcement, dollar lost a little bit of its gains. But we will see how the dollar might play out today in the markets just in a few minutes. Now I want to go on the calendar a little bit. And we've had some reports coming out already today. With a very good surprise, I would say, on the Chinese manufacturing PMI, non-manufacturing PMI especially, considering the Chinese economic slowdown. These are some very good numbers. We expect some European data to come out fairly soon, I would say, but I would actually pay attention on the inflation CPI from Germany and also HICP indicators. And of course, the US quarter-to-quarter GDP figures. Now, I want to go straight to our charts and start with our pound, because I talked about how the pound has been actually performing over the past few days in my previous videos as well. And just to give you an overview, it's just because Mrs. May has shifted from not extending Article 50 to now allowing the Parliament to actually have a vote in order to support an extension on Article 50, if of course it's necessary. Now, on the daily chart, we see that pound has been moving on a downside channel, and we also see that after this very good bullish, strong divergence, prices started moving higher. Now, after the rejection at 0.618 Fibonacci, we've had only a couple of days ago a break above this high. Now, from here, prices have been rejected by these minor resistance level, I would say, and could head higher to what I call a magnet zone. This is a magnet zone because there is a lot of levels that are active and have been active in the past. So this magnet zone is anywhere between 134 and 135, but know that before this, we might see a correction a little bit lower. Now, when I go down to the 4-hour chart, just to give you a little bit of a better view, we are seeing some sort of corrective and also impulse waves here. And from here, down on that level, around 134.26, or even where we are currently, we could see prices correcting a little bit lower to the 38.2 Fibonacci, which is near 1.32, or going a little bit lower to 1.3061 to create to actually retest this level, and then move higher because we also have a bullish divergence supporting this move. Now, down on the 1-hour chart, I want to concentrate a little bit on those two levels, right? And just focus on the fact that we are here. We could be creating a false break up here, okay? And prices trade in a very tight range. So we are expecting a breakout very soon. Now, if it's going to be up or down, it's not certain, but we have some signs that show that markets could move lower. Now, I want to also mention that we do have a bullish divergence as well okay, and the bullish divergence is much stronger than the bearish divergence. Okay, it's a hidden one, but nevertheless still stronger, which means that a corrective wave down may be seen before we see an upside move. Okay. Now I want to go and talk a little bit about dollar yen, just to give you a quick overview. We also have been on an upside move over here, and we've actually seen prices breaking higher and higher, creating higher highs up until this level. This level is the psychological level of 111. Okay, so here we see prices moving in a sort of range, in some shorter time frame, tighter ranges. In the time frame that we're looking at now is a bit of a wider range, and we could expect prices to go all the way back below. But don't forget that we are expecting the USD, US GDP numbers to come out today later. So I'm not really confident on any sort of moves that will cause a breakout, or I wouldn't expect something that is going to be, breaking, going over the markets for like over 20 or 30 pips. So for that reason, I want to go down to the 1 hour chart and concentrate a little bit again on the Bollinger Bands. We can indeed see that the Bollinger Bands have expanded quite a bit yesterday, but over this morning we saw a decline because yen was a little bit stronger earlier in the session. I am seeing, and you can see that too, that the Bollinger Bands are contracting, which is an indication that a breakout will follow very soon. Now, whether this is up or down, we don't know, but know that the distance even to reach the Bollinger Bands in this scenario is quite wide. We are sitting right now around 110.8, and this is a previous trend line from the upper trend line of the descending channel we have here structured over the past few days, I would say. Prices can be expected to go down to 110.7 to 110.6 before the US GDP numbers come out, or even range between above or even below the trend line. I wouldn't be surprised if we see prices going all the way up to 111, because it is a psychological level that normally attracts both sellers and buyers. But I would suggest to be a little bit patient and wait for the actual US GDP data to come out to have further clues, additional clues of how to trade dollar yen. I want to thank you for watching our daily video, and I wish you to have a good trading day today as well. Feel free to subscribe to our channel to stay updated about the markets, and don't forget to visit our blog where we cover the latest news, publish trading ideas, and provide all the necessary tools to serve you responsibly.